Obviously, traders and investors want clarity around what central banks are going to do with monetary policy going forward, but it's pretty clear from what we've heard from the Federal Reserve and the Bank of Japan that we want to see how event risk plays out through this June to July period. And I think from that period after that, once we have some answers, if we do get the clarity, then perhaps we can see these monetary policy changes that investors are so well positioned for at the moment. But certainly the call was when we got into the trading floors this morning, we had to react to what the Federal Reserve is saying. And clearly they're very cautious at the moment. We've seen that through the various Fed funds projections going forward. The Holy Trinity, which the Fed are looking at the moment, which Janet Yellen said in her press conference, and she used the word cautious 11 different times, is that we want to see what happens with inflation expectations. We want to see what's going to happen with the labour market. This makes the 8th of July employment report very, very important indeed. And of course, the epicentre of all of this is really what happens with the UK referendum. The Bank of Japan, who left policy unchanged today in Asia, causing the yen to rally significantly. We've got Aussie yen trading at the lowest level since 2012 and dollar yen just coming down into that low 104 region at the moment. And they're very much sitting on their hands, keeping their powder dry until we see what happens with Brexit and other bits and pieces there as well. So a number of central banks, including the RBA, keeping policy very much on hold at the moment. Let's see what happens with this July or June-July period and see if we get answers, see if it's a risk-on or risk-off type environment, and then we'll have to adjust policy accordingly. If we have a look at moves in Asia today, well, yeah, there was a bit of a bid coming through in markets, but that's given up the ghost. And generally towards the back end of the session, we have seen markets rolling over in line with what we've been seeing in Japan. And that failure for the Bank of Japan to really do anything at all has seen, as I say, the yen strengthen and the Nikkei down over 2%. And that's taken US futures and our European opening calls down somewhat. Gold's traded above $1,300. We've seen a little bit of a selling coming through in oil at the moment. And sentiment, I think, is really taking a bit of a battering of late. And what's most important here is the fact that the more dovish shift from the Federal Reserve haven't reverberated in buying and the easing of financial conditions. Traders are saying if the Fed are worried, perhaps we should be as well. And I think that's a really important change for markets.